What if I told you that Bitcoin could hit $50 million per coin, not as a meme, not as a fever dream, but as a cold, calculated prediction from someone who actually runs money for a living? We're talking about Michael E. Jackson's 2041 forecast. And whether you think he's a visionary or a lunatic, the math behind it deserves your full attention right now. Jackson isn't just throwing darts at a board. His thesis rests on one very specific condition. Bitcoin must become the world's neutral reserve collateral, trusted by governments, corporations, and central banks the way gold once was. And if that sounds far-fetched, remember that 20 years ago, the idea of a stateless digital currency settling trillions in value sounded even crazier. Think of Bitcoin like a Switzerland that can't be bribed, no army, no president, no central bank with a printing press, just math and consensus. That apolitical character is the entire value proposition. Because the moment Bitcoin can be seized, frozen, or legislated into submission, the $50 million story dies on the operating table. So what actually needs to happen for this to become real? The short answer is 4 massive interconnected things: global regulatory clarity, institutional grade custody and settlement infrastructure, scalable liquidity deep enough to absorb sovereign level flows, and ironclad protections against political capture. Regulatory clarity is the unsexy foundation that nobody wants to talk about because it doesn't trend on social media. But without it, a pension fund manager in Oslo or a sovereign wealth fund in Abu Dhabi simply cannot allocate their compliance departments, won't allow it, full stop. Then there's custody, which sounds boring until you realize that not your keys, not your coins, is an existential problem at institutional scale. We need the equivalent of a Federal Reserve grade vault system, insured, auditable, legally recognized, before the big money even thinks about moving in. Liquidity is where most optimistic Bitcoin narratives quietly break down in the corner, hoping no one notices. A sovereign wealth fund deploying $50 billion into Bitcoin can't do that without a market deep enough to absorb the trade, without moving the price 40%, and we are not there yet, though the trajectory is improving. Here's the historical irony worth sitting with. Every financial revolution, from joint stock companies to Eurodollar markets, looked ridiculous at mile 1 and inevitable at mile 20. We are somewhere around mile 7 with Bitcoin institutionalization, which means it's too late to ignore and still early enough to be genuinely uncertain. The psychological trap most people fall into is binary thinking. Either Bitcoin is digital gold and goes to the moon, or it's a Ponzi and goes to zero. The more honest and frankly more interesting scenario is that it becomes a partial reserve asset, the way gold is today, capturing maybe 5 to 10% of global reserve allocation rather than replacing everything. If Bitcoin does achieve neutral reserve status, the consequences for sovereign debt markets are almost uncomfortable to think about. Countries that have historically relied on currency debasement as a pressure valve, think Argentina, Turkey, even the United States at the margins, suddenly face a harder monetary constraint, and that is either a discipline catalyst or a geopolitical earthquake, depending on your priors. Portfolio allocation gets rewritten too, because if Bitcoin is genuinely uncorrelated, apolitical collateral, the 60-40 stock bond portfolio framework starts looking as outdated as a flip phone. A small allocation, even 2 to 5%, in a world where Bitcoin is institutional grade, changes the efficient frontier in ways that quant desks are already quietly modeling. Now, let's address the misconception that Bitcoin's volatility permanently disqualifies it from reserve status, because that argument misunderstands how reserve assets evolve. Gold was volatile and mistrusted for decades before Bretton Woods codified it. The volatility was the price of the discovery phase, not a permanent character flaw. The practical lesson from every major asset class transition is this: size your position for the uncertainty, not your conviction. You don't bet the farm on a 2041 prediction. You take a measured, disciplined allocation you can hold through 50% drawdowns without making an emotional decision at 3 in the morning. Process beats prediction every single time. And nowhere is that more true than in assets where the bull case is extraordinary and the bear case is also non-trivial. The investors who will benefit most from a Bitcoin reserve asset future are not the ones who are most certain. They're the ones who are most consistent and most protected against forced selling. At the philosophical level, what Bitcoin's potential ascent really forces us to confront is the question of what money is, who controls it, and whether that control is actually serving people or just entrenched interests. That's not a crypto bro talking point. That's a question economists and monetary historians have wrestled with for centuries, and Bitcoin just made it urgent again. Whether Bitcoin hits $50 million or $50,000, the system it's pressuring opaque monetary policy, unauditable sovereign debt, politically captured currencies needed to be pressured. Your job as an investor isn't to predict the destination, it's to prepare rationally for multiple outcomes and stay in the game long enough to benefit if the thesis plays out. Discipline, sizing, and consistency are the only edges that compound reliably across every market cycle, every asset class, and every geopolitical regime change. And that's true whether Bitcoin becomes a reserve asset or a historical footnote. The $50 million story might be right, might be early, might be wrong, but the preparation process is valuable either way. And speaking of preparation and building real wealth across multiple asset classes, whether you're exploring Bitcoin, real estate investing, home contracting work, or finding the right lenders to fund your next move, we can help you get started. So check out our links in the description below.